Hello, my name is Charles Levy, and today I'm going to analyze the stock of Alaska Airlines, represented by the ticker symbol ALK, and give a financial analysis on the company, as well as whether or not it should be invested in. Alright, so for the presentation, first I'm going to give a little bit of insight on some company info, get a little background on Alaska Air, and then I'm going to show why we decided to invest in this stock 3 months ago. After that, we're going to show how the stock performed over the span of the assignment. And after we've done that, we're going to give a financial analysis on Alaska Air and say whether we would or would not invest again. Alright, so to get things started, I'm going to go over a little bit of background information about Alaska Airlines. The company was founded in 1932 in Anchorage, Alaska by a man known as Linus McGee. At that time, each flight only held 3 passengers, which is obviously very different than the huge global reach that the company has today, as it is the 7th largest airline in the United States. The company has over 15,000 employees and goes through 880 daily flights. They also service over 30 million customers annually, and they place a high emphasis on customer satisfaction, as they've been ranked for having the highest customer satisfaction among airlines for the last 9 years by J.D. Powers and Associates, which is a pretty impressive thing considering that customer satisfaction is something that airlines are frequently scrutinized for. Alright, so now I'm going to go over why we decided to invest in Alaska Airlines. When we first got this assignment 3 months ago, the first thing I did was went to Google and looked up hot stocks at the moment, and one of the companies on the list was Alaska Airlines. And the reason for that is that it is going through a huge merger with Virgin Airlines for the last year or so, and recently today it was actually approved by the Justice Department. Like I said before, Alaska Air is the 7th largest airline in the U.S. currently. However, with the merger, it is projected to become the 5th largest airline in the U.S. and become the West Coast premier airline. This fact gives it the potential to become one of the biggest airlines in the U.S. and join those prestigious airlines such as Delta and American Airlines. Alright, so given that we're amateurs in the financial world when we first started this course and received this assignment, I wonder how we did with this stock. Well, we bought the stock at $65.50, and today it is valued at $86.98. Now, obviously, this is a sizable increase, so we did pretty well, and the stock in total went up by almost 33%. Alright, so obviously over the duration of the course, we got a little bit older and a lot wiser when it comes to the financial world and analyzing stocks. So now it's time to take some of that wisdom that we've been imparted in and apply that to this financial analysis of Alaska Airlines. So as we can see from this information that I have pulled from the Alaskan Airline website and financial statement section, revenue went from $5.368 billion to almost $5.6 billion in the year 2015. This isn't that big of a jump, as it only represented a 4.3% increase. However, what it lacked in this area, it made up for in the other areas, such as operating income, which went from $962 million to $1.3 billion in the year 2015. This was a 35% increase, and as you can see, the increase just kept rolling, as net income also went from $605 million to $848 million in the year 2015, and this was a 40% increase. As you can see from the tiny increase in revenue, that wasn't the key in this area. The reason why operating income and net income went up so much was because the cost of goods sold went down. What really stood out, however, was the increase in free cash flow, which went from $336 million to $753 million in 2015. This over doubled the amount of free cash flow that Alaska Airlines had and increased it by 124%. This increase in free cash flow allowed Alaska Airlines to have some capital to invest, develop, research, and it was probably what it used to acquire Virgin Airlines and create the merger, which is set to take it from the 7th largest airline to the 5th largest airline in the U.S., which is a great improvement, and that's all thanks to free cash flow. Alright, so to continue the financial analysis of Alaska Air, now I'm going to look at the consolidated balance sheet from the third quarter. As you can see from the end of 2015, their cash and marketable securities has gone up considerably to September 30th of 2016. Their cash has almost tripled, and this is rather impressive considering that they just purchased Virgin Airlines, and that probably cost them a lot of cash, and they've still managed to keep that up. Another thing that's rather interesting on this sheet is their current assets and total assets, which have also gone up rather considerably. And one area of potential concern could be the long-term debt, which has over tripled. However, considering how much cash they have and how many current assets, you can see that they are still in pretty good standing. All right, so now that we covered the background information on the company, its history, and of course the nitty-gritty financial details, now it's time to determine whether this stock is a great stock and worth investing in. And obviously, the answer to this is a resounding yes. The stock has gone up over 33% in the period that we had invested in it with, and it continues to show promise as cash, marketable securities, current assets, and total assets have all gone up over doubled from the end of 2015 to the third quarter of 2016. This company shows great promise. As you can see by its stock price, it continuously goes up, and it's reaching 52-week highs as we speak. So overall, I would highly recommend investing in Alaska Air. It is set to be the fifth largest airline in the U.S. and join that elite group of airlines such as Delta and American Airlines very soon, and it is a very great stock. Thank you for your time. We appreciate it.
Hello, this is Henry Castaneda, and today I'm going to talk about Everbridge. First, what do they do? So first, I would like to say that Everbridge was created in 2002, just after the attacks of 9/11. Jamie Alderson, the CEO of Everbridge, he saw the necessity to create a software that can help others. So Everbridge is a global enterprise software company that provides applications which automate the delivery of critical information to help keep people safe and businesses running. During public safety threats such as active shooters, terrorist attacks, severe weather conditions, as well as critical business events such as IT cyber attacks. When we talk about numbers of Everbridge, it's actually a company that is not well known yet, but is having a steady pace on their increase. When you talk about global customers, right now they have 3,000. It's around 3,017 right now, but just on September from 2015, it was around 2,500. When you talk about the communication delivery path, they have 100 and plus available, which is amazing. Is notification since 2012 is being over 2.4 billions, and also that is more amazing, I think, because I know the communication globalization of the internet stuff, the territories that they support is over 200 countries, so they can reach different places from the whole earth. And contact profiles, they have over 100 millions, which is amazing. So now I'm going to talk a little bit about how Everbridge is being influential. And when I say, for example, Fast Action, I want to mean they were like the primary company that helped in the Boston Marathon attack in 2013, and as well as the Dallas shooting in 2016. Through Everbridge, a lot of people got notifications about what's going on, and as well people to act faster in order to prevent more damages or losses through it. When we talk about the clients of Everbridge, we have some clients that you can take into consideration, which is the Metropolitan Police. Out of the 10 top US cities, 24 out of the top 25 airports of US, 8 out of the top 10 investment banks. Now I'm going to talk a I would like to talk about the Everbridge IPO. Everbridge is pretty much a new stock. It just came out on September 2016. Actually, the day is the 16th of September. When I picked this stock, it was like it was a new stock for me, so I saw the opportunity to buy it. The ticker symbol is EVGB. The deal size was $90 million. So between all the companies that IPO this year, Everbridge was a really good candidate to buy. The price was only $12. The stock offer was 8,625,000 shares of common stock. Out of that amount, 6,250,000 were offered by Everbridge, and 2,375,000 were offered and sold by existing stockholders. Now I'm going to talk a little bit of the company's financial, just a few numbers. So the beginning of 2015, the revenue was 58.7 million, and at the beginning of 2016, the revenue was 35.6 million. Even though the numbers were like pretty much from 2016 less than 2015, the net loss of 2015 was 10.8 million, and in 2016 it was 6.2 million. While I was reading some news, I got to call this from Jamie Allerson, the CEO of Everbridge. He says that while the company isn't profitable from cash flow perspective, the company is focusing on delivering growth and adjusted positive results on earning before interest, taxes, depreciation, and amortization. Now I'm going to talk about the third quarter's 2016 financial results. As you can tell in the income statement, we had net income growth of 27.40%. The sales revenue were 19.93 millions. The sales or revenue growth, it was 31.24%, but the EBITDA, it was less. It was in a minus 455,000. So when you go through the balance sheet, you can tell that the cash short-term investment, it was 62.30 millions. The liabilities of the company at the moment was 62.76 million. The total shareholders' equity, it was 44.03 million. The book value per share, it was 162. And when you go through the cash flow statement, you actually tell that the capital expenditures, it was minus 1.65 million, but they have a free cash flow of a positive 7.83 millions, and cash flow per share, which is plus 0.56, and free cash flow per share, which is a plus 0.53. I'm gonna get in deep into it, so I'm gonna explain now about the third quarter 2016 financial highlights. The total revenue was 19.9 million, an increase of 31% compared to the 15.2 millions for the third quarter of 2015. GAAP operating loss was minus 2.4 million compared to the GAAP operating loss of 3.6 millions of the third quarter of 2016. So as we can tell, the company is actually doing better. Adjusted EBITDA was 0.3 million compared to the negative 1.4 in the third quarter of 2015. Cash as September 30th of 2016 totally was 62.3 million compared to the 1.0 million as June of 2016. The cash flow from operations were 8.2 million compared to the 1.5 million for the third quarter of 2015. And the free cash flow, which is really important for the stockholders, was 6.6 million compared to the negative 0.9 million from the third quarter of 2015. Actually, what it's telling you is that the company has been increasing the amount of money that they have. The cash flow, the revenue, even the gap is getting better. So it seems to be a really good company. To talk about recent business highlights, which is pretty much what interested me the most in order to buy this. They ended the quarter with 3,066 global customers, up from 2,514 at the end of the third quarter of 2015. They announced Summer 2016, the product released with enhancement to mobility, collaboration, reporting, mapping, and workflow automation to help improve the ways the corporation and government agencies communicate, which it was really good when they came out with this. And one of those is that they received the certification and acceptance into Lonel Open Access Alliance program, enabling Everbridge Safety Connection customers to interface with Lonel's OnGuard system for real-time building location data for employees, contractors, and visitors. So now talk a little bit of the graph of the stocks. I have two pictures to show you. Pretty much the one on the top, there are two similar pictures. The one on the top is just the graph in general, and the second one down, it has a specific date, is the date that I bought the stock, which it was 17.01 on the 20th of September. Um, I didn't expect it to buy at that amount because I picked the stock when it was still on $14 per share. Well, we didn't have the chance. I know I lost money. I lost money because right now the stock is trading at 60, around 16.95. I lost in general like $300 on this company, but I really saw a huge potential when I saw this company. As you can tell, the pattern when it was still on the first scan, it was going upwards, and then when they closed like the first market and they became to the secondary market, they yes that the stock went down for a little bit and then it's been going up lately, which is impressive. So as a conclusion, would I pick this stock again? It's a definitely yes. This company has a huge potential. Even though it's a software company, they don't have inventory. They actually have a really good cause, which is helping others. And you can tell by the numbers. The company just last year, September last year, they have 2,000 customers, and now they're at 3,000. They're working with the police. They're working with the top airports, the top investment banking companies. So I can have huge expectations about this company. It's just getting known right now, but they're going slowly but surely. Now I will pass the talk to my friend. He's gonna talk to other companies. So thank you. This is my presentation. Again, I'm Henry Castaneda.
Hello, shalom. So one of the stocks that me and my groupmate chose is Cisco. I'm going to speak a little bit about the background of the company. We'll continue with some financials like revenue, net operating income, earning per share, and all this fun stuff. We'll continue with the dividends, and there are some very interesting stories about that. And afterwards, I'll speak a little bit about the graph and some conclusions. Cisco Systems, or more commonly known as Cisco, is a large corporation that produces computer networking products and services. The name Cisco is derived from the city of San Francisco. This is where the original CEOs are from. In 1990, Cisco went public and got listed in the Nasdaq. Cisco Systems began making routers before people even knew what internet is. And then that gave them a huge advantage. They actually they began that unbelievable industry. Some interesting facts about Cisco is that the company was founded in 1984, 6 years before they went public. Nowadays, they have 65,000 employees in over 165 countries, which makes this company to be one of the largest companies in the world. Cisco's IPO is considered one of the top 11 greatest IPOs of all time, and it's an incredible story. It happened in February 16, 1990. The price per share was $18. So in a fast calculation, if you would had invested $1,000 during this Cisco's IPO, you would get something around 55 shares. Adjusted for stock splits, today you would hold 16,000 shares, and your investment would be worth not less than $461,000. This represents a compound annual growth rate of over 28%, which is incredible. In the same day of the IPO, Cisco shares popped 24, but you were a fool if you sold them. 10 years later, they were up 60,000%, which is unbelievable. The price of the stock is that high, but still, Cisco until 8 years ago, they did not pay dividends at all. As we learn in class, there is many ways to invest the free cash flow, and Cisco chose to pay the earning back into R&D and other growth strategies. And I believe that this is why the company is that huge. Very soon we're going to speak about the dividends in depth. So the numbers in the company's financials are also very interesting. We can see that the revenue went up from 47 billion to 49.24 billion, which is a lot, 2.24 billion difference. Earning per share is also, it went up by around 20%, and as we learned in class, it's very important for shareholders. Net income, the numbers you see in this chart are GAAP number, 7.9 billion and 9 billion. It went up by 1 billion. But and non-GAAP basis, net income was 11.4 billion, and then non-GAAP earning per share was 2.21 dollar. And it's also interesting to see that big difference in GAAP and non-GAAP, and I think it's also important for the decision making. If we move on for the cash flow, very important. The company succeeded to keep 12.3 and even to raise it a little bit to 12.6, which looks like a small difference, but it's a $300 million difference. It means something. And also the deferred revenue went up by $1 billion. In my opinion, that's the most interesting and important part in the analysis of this stock, the dividends. So until 8 years ago, Cisco did not pay dividends at all. It was around 2008 when they started to do that after a lot of pressure from the investors. And the dividend was in the last year was 0.21 per share. And in total, it was $1.1 billion for the full fiscal year. And we already saw before in the financial statement that the free cash flow of the company is very big. They have a huge free cash flow, so they can allow themselves to pay dividends. The most important and interesting thing about Cisco is the huge repurchase. For the full fiscal year of 2016, we are almost at the end of the year. Cisco repurchased approximately 155 million shares of common stock. They paid 27.22 per share, and in total they paid $4.2 billion in repurchase, which is incredible. That by itself shows how confident Cisco in the future of the company, and how confident we can be in joining as shareholders and buying this company. So this is the annual graph of Cisco as for December 9th, 7 p.m. after closing. So we can see that from February the stock went up by around 30%, which is a lot. In the last 3 months there was not a big change. I don't like to rely decision making regarding stocks only based on graphs, but the graph supports what we already knew, that Cisco continues going up, and it's pretty affected from the whole market. But providing Cisco is the biggest company in its sector, it has a lot of its beta is not too high. It has a lot of influence and it's independent in a sense. Cisco continues to be a world leader in networking and services related to communication and information technology. Since the recession of 2008, the company's stock has doubled. It initiated its quarterly dividend program, as we spoke about it before, and it has made a massive share repurchase. Also, I mentioned it before. If regarding to the question, I would definitely do it again, and I actually did it. I purchased by myself, not outside of the game, stocks of Cisco, and I believe that maybe in the short term the stock might go down or up a little bit. I believe in the long term it's a great investment. Cisco, by doing that massive repurchase, also believe in the future of the company, and there is a lot of support from the earning per share, from the revenue side. I didn't touch all the margins, but obviously the margins are great as well. And I believe that it's a good investment. It was a good investment 3 months ago, and it's still good right now.
Hi, my name is Amy and I'll be talking about our stock, MetLife. About the company. MetLife is a leading global provider of insurance, annuities and employee benefit programs, serving 90 million customers through its subsidiaries and affiliates. MetLife holds leading market positions in the United States, Japan, Latin America, Asia, Europe, and the Middle East. Founded in 1868, MetLife continues to build upon its long history of providing unique solutions for its customers by launching new and innovative products, expanding its role as a leader, and continuing to provide high-quality financial solutions that are backed by a trusted, well-reorganized brand name and strong financial performance. Next, I'll be talking about stock information. Stock quote. MET common stock, exchange in US dollar. The price $57.19. The change 0%. Value 2,562,499. Today's open $57.08. Previous close $57.19. Intraday high $57.38. Intraday low $56.76. 52-week high $57.78. 52-week low $35. As you can see, here is a stock chart. This chart shows the progress of MetLife Inc. from July to December in US dollars. Below it, you can also see the volume of the stock in millions of dollars. What this chart clearly shows is the rapid growth in early November. It went from about $47 million to about $54 million. To this day, the stock is still growing slowly. Here you can see the third quarter summary of 2016. Everything is in millions of dollars except for the per share data. This shows that the total revenue has decreased by 2% from 2015 to 2016. And the net income has decreased by 52%. Down below, you can also see the ROE, or return on equity calculated. It has went from 7.1% in 2015 to 3% in 2016. Now moving on to the financial highlights. Net operating cash flow of MetLife has increased to $2,928 million, or 10.95%. When compared to the same quarter last year. The firm also exceeded the industry average cash flow growth rate of 17.25%. Compared to where it was a year ago, today, the stock is now trading at a higher level regardless of the company's weak earnings results. Turning our attention to the further direction of the stock, it goes without saying that even the best of the stocks can fall into an overall down market. However, in any other environment, this stock has still a good upside potential, despite the fact that it has already risen in the past year. Met with its decline in revenue slightly underperformed the industry of 2%. Since the same quarter 1 year prior, revenue slightly dropped by 2.4%. Weakness in the company's revenue seems to have hurt the bottom line, decreasing earnings per share. Despite currently having a low debt-to-equity ratio of 0.31, it is still higher than that of the industry average, inferring that management of debt levels may need to be evaluated further. Concluding, will we invest in this stock again? Yes, I would choose to invest in MetLife again if we had a choice. The company's strengths can be seen in multiple areas, such as its attractive valuation levels, its good cash flow from operations, its solid stock price performance, and its largely solid financial position with reasonable debt levels by most measures. I feel its strengths outweighs the fact that the company has had somewhat a weak growth in earnings per share. So overall, we would invest again.
How's it going? My name is Charles Leyvi, and my group, consisting of Amy Zhu, Henry Castaneda, and Tomer Tal, will now do a recap of our portfolio and basically everything we learned from using this real life application of what we learned in our finance class to the real stock exchange world. All right, so in summary, the way we decided to divvy up this project was that each of us would pick two stocks, and given we had four members, that made for a total of 8 stocks. And we decided, we wouldn't place any one of us above anybody else, so we divvied up the money equally and spent about 125,000 of the million on each stock. All right, so now it's time to see the results of our portfolio and the results of our choices and how we did. As you can see here, we actually did a fairly good job. We made $110,000 and a 10% profit. We obviously lost money in a few stocks, such as Alibaba. However, we also won a lot of money in certain stocks, as is typically the case in the stock market floor. You win some and you lose some, but luckily we won more than we lost. We did very well in picking certain stocks such as Alaska Air and MetLife, which increased substantially, and overall we're very pleased with our choices. However, we know that if we started this project today, given the information that we learned through the finance class, we would be able to do an even better job applying what we had learned to our stocks, and we'd be able to make a better assessment and hopefully weed out the bad stocks that we chose and kept the good stocks that we had. So overall, we'd like to thank you for your time and hope you enjoyed our presentation.